Welcome back. Oil prices are now at a nearly 6-month high. The surge after the Trump administration announced yesterday that the U.S. will no longer exempt any countries for importing oil from Iran. Secretary of State Mike Pompeo speaking out about the administration's maximum pressure campaign against the Iran regime yesterday.
Our goal has been to get countries to cease importing Iranian oil entirely. Last November, we granted exemptions. We will no longer grant any exemptions. We're going to zero across the board. How long we remain there at zero depends solely on the Islamic Republic of Iran's senior leaders.
Joining me right now is the global head of energy analysis for Opus, the oil price information service, Tom Kloza. And Tom, it is good to see you this morning. Thanks so much for being here.
Good morning.
So we're seeing oil really react to the information that we're going to see less oil from Iran on the global markets. What's your reaction to that? And the administration has said, look, we are not going to, watch gasoline prices get out of hand in terms of really becoming an issue for people because Saudi Arabia is there to pick up the slack. What's your reaction?
Well, my reaction to that is the idea that the Saudis might think a certain price is stable and the U.S. would agree on that is probably a stretch. The Saudis do have extra oil. The United Arab Emirates have extra oil. They have it in their pocket. They can readily tap into it. But there are some real question marks as to whether or not they think they should tap into it at $70 as opposed to $80. So it's going to be an interesting summer. It's going to be a summer of sizzle, because the timing of this is a little bit inelegant. We've got very high gas prices right now for the season because they've exploded relative to crude oil on refinery issues. And we've got trouble in Libya, trouble in Nigeria, and pure chaos in Venezuela. So this is going to be a tightrope. So
do you think oil prices keep going up then?
I do. I think that the $70 crude oil price for Brent becomes an $80 standard or something in that neighborhood. And I think that the U.S. WTI price probably goes from 60 to 70. Now, how long they spend there, we don't know. We might see that extra oil come on the market very, very quickly at that point. The thing that surprises me as well is that if the President and the State Department had waited until the fourth quarter, we probably could have sort of mustered up another 1 million barrels a day of Texas output, because the pipelines will be working to bring the oil from West Texas and New Mexico to the rest of the country then.
Tom, quick question for you. How about domestic pressure on oil prices, right? So we saw some movement happening in the Florida legislature, and we've also seen some movement happening in the United States Congress to limit offshore drilling off the coast of Florida. Does that have any impact on oil prices as we're seeing them sort of spike now?
No, I think it's a reach to think that, we're going to be able to drill for oil off Florida or off the U.S. Atlantic coast, and even to a certain extent in the Arctic, although I do think there'll be some more oil coming from Alaska. So we've got plenty of easy oil to find. I mean, West Texas seems like it's a perforated sheet right now. There's so many drills and so many wells that aren't even operating at the moment. So we've got plenty of crude coming on board. We may get to 15 million barrels a day of crude oil here in the next few years. So crude oil will not be the problem for the United States. And it may be that our prices are very advantageous versus the rest of the world.
Real quick, Tom, it's Dagan McDowell. Do you think in the short run, though, because you said that it seems like what you're saying is it's going to take time to get more crude coming out of Texas, say the Permian Basin there, to offset the crude lost on the world market from Iran. But do you think we need to tap the Strategic Petroleum Reserve in the short run?
I don't think so. I'm not a big fan of the Strategic Petroleum Reserve, but this isn't about a shortage. It's about the perception that, there may not be enough crude to satisfy 100 million barrels a day of international demand. The United States should be relatively in much, much better shape. Watch out for the relationship between the United States and China. China is, of course, one of the countries that's not going to get a waiver. And to the extent that they try to go around the regulations or maybe look to stockpile crude, that's going to have a big impact on the market. And the other thing is, watch the price of gas. We're going to be over $3 in a bunch of red states before long. and I didn't think that was going to happen this summer.
All right, we will leave it there. Tom, good to see you. Thanks so much for joining us.
Thanks.
Tom Kloza.